What's up, guys? Welcome back. It's your friend Nate. I wanted to respond to a question that I got yesterday about real estate investing and why I'm not a big fan personally of real estate investment. And the first reason is the opportunity cost of the down payment. So let's say if you're talking commercial real estate, you got to put a third down, right? So even if you found a deal and it's $300,000, you're talking $100,000, right? Well, you have an immediate opportunity cost of $1,000 a month because you could invest that money in other long-term strategies that would get you about $1,000 a month. Now, that also means that your down payment of $100,000 costs you another $100,000 the first 7 years of owning that property. And then 7 years after that, the 200 turns into 400, right? So there is an opportunity cost to that down payment alone right up front when you're purchasing real estate investment property. The second reason I don't like it is because there's a lot more expenses than people really realize. Now, I get that there's tax advantages, but just because you're depreciating and amortizing things doesn't mean that they're not actual expenses. You're still, from that top line revenue, you're subtracting things out and your bottom line is impacted by that. And so, as I pointed out in other videos, I urge you guys to just do a simple exercise. You can go right online and see some properties for sale. Figure out what those rents in that local area are. So you know that you have to put a third down. You know what the average typical rents are in that area. What multiple of those rents are you paying for that property? And not just the multiple of rents, but the multiple of earnings, right? See, that's where people go wrong with real estate. They say, well, the rent's X amount and I'm paying 12 or 15 times that amount, so it's not a bad investment. But they're failing to subtract out all the other consistent costs with maintaining the property and all the other expenditures, right? Interest expenses, that's an expense. Of course, you can write that off, but it's still an expense. Same thing with your maintenance costs. That's an actual expense. Vacancy costs, those are actual expenses, right? Your property tax, an actual expense, right? It's gonna be consistent. It's only gonna go up. So the question when you're purchasing real estate is, can I raise the rents enough to cover inflation and increasing additional costs over time? And I think what you'll find right now, in my personal opinion, in the market right now, I don't know if you could really raise rents 10, 15, or 20% more than they are right now without drastically increasing defaults, late rents, vacancies, evictions. I think we're pretty close to that right now. So when I look at real estate today, I see very high multiples being paid, which means very low returns. And especially when considering the risks that you're taking, how the laws are, the eviction process, and the fact that you have to cover that mortgage regardless, I just think it's a lot of risk. And the other thing is, a lot of people become millionaires through real estate investing by using leverage, right? By using debt. Because, of course, as you put that down payment on the home and as you get rents coming in and as the mortgage is paid, you are increasing your equity little by little each month on average, right? So you're able to extract equity from the asset that you do own, which, let's say, for example, if this is your first rental property, there is the ability to scale with using your equity, which is using, debt, right? So you can always, no matter what investment you're doing, if you want to increase your possible returns, you can definitely use margin. You can definitely borrow against equity. But what I would say about that is it definitely increases your downside risk as well. So it's just something to think about. I think that there's significantly higher returns with more liquidity and less downside risk, especially less unsystemic risk, than purchasing a rental property in your local area. Now, again, though, if you're not comfortable with other avenues of investing and you're just going to be a real estate guru and that's what you want to focus on, long-term, real estate has been known to build wealth. But I would also say, I think that anyone that could be a successful real estate investor could be an even more successful public stock investor. And the reason why I say that is because so many of the terms are like interchangeable. For example, when you're talking public stocks, the term would be, the price to free cash multiple. And in real estate, they call it the cap rate, right? The rate on capitalization. And I find, and I would challenge you all as well to do your own homework on this, but I would find that if you were to look at public stocks, you're paying significantly lower multiples. And you have the advantage, like I said, of liquidity. There's no debt or leverage involved. It's just that you're paying a lower multiple, which means you're getting higher returns. And you also have that liquidity, right? You can click and buy, you can click and sell with public stocks. You can't just do that with a real estate property, right? So everyone can decide how they want to multiply their net worth, which investment segments that they prefer. I'm not a real estate guy unless it's going to be, around a 9 to 10 multiple of free cash flow. And because of the popularity of real estate, I just find it's very oversaturated and it's difficult for me to find higher returns in real estate than you could with public stocks. And another reason too is stocks are able to raise prices significantly easier. They can also pivot, make different investment decisions. If they're losing money in one place, they can make it up in another product. Real estate investing, you're in the business of renting space. And so you don't really have any other product to offer to fix any issues that you're currently dealing with. You are renting X amount of space, right? X amount of square footage in whatever town. And that's what your investment is, right? It's very, very isolated. Whereas with publicly traded companies, they have other alternatives to make up for shortfalls, and they can also raise prices of products more accordingly with inflation and so on. So anyway, like I said, I got no problem with it. You guys want to invest in real estate? I'm sure you're going to become millionaires at some point. I just feel that if you were to take that same approach and invest in individual public stocks, you would probably be a multi-millionaire as opposed to just a millionaire.